Hi there, John Kozeski here to talk about your small business. It's being reported that as of this week, over 3 million forgivable PPP and EIDL loans have been approved by the Small Business Administration. If your small business is among those fortunate enough to receive a loan or loan advance, your next major hurdle will be to ensure the amount you receive is actually forgiven. Now, on the surface, you could think there's no way the federal government could follow up on all of those loans. But we're being told by our banking members just the opposite. They have in fact been told to scrutinize these programs to a whole new level. And frankly, that's a good thing. We want them to be making sure that people are not gaming this system designed to help all of us who truly need the help. But that also means we have to be diligent in our record keeping and know exactly what we can and can't do with these funds. Let's start with the EIDL program. If you accept an EIDL, the loan itself will not be forgiven. The only part that's forgiven is the loan advance of up to $10,000. You likely have realized by now that the forgivable loan advance is not a flat $10,000, but instead $1,000 per employee. Of the two, EIDL loan advance forgiveness is the easiest to understand and comply with. Your EIDL advance is considered part of the EIDL loan that you apply for, along with the advance. If you receive the advance and are subsequently denied or choose to decline the EIDL, you still don't have to pay the advance back, assuming you spend it on payroll, rent, or, and here's the kicker, other obligations that can't be met due to revenue loss. In short, be smart and spend it on your business instead of buying the new boat we both know you want, and you're going to be fine. At this point, most of you have probably only seen the advance, but stay tuned in the coming days and weeks to hear directly from the SBA about how much loan is being offered. Once you receive the funds, you are free to use them immediately. And although there is no application or accounting requirement, you should keep a detailed record of how you spend the advance funds in the likely event that the SBA has questions at some later date. Now, unlike the EIDL loans, PPP funds come from the SBA-approved lenders like banks and credit unions, but also some unusual places like PayPal and Square. When you accepted a PPP loan, you did so with the understanding that any part of that loan that is not forgiven will have to be paid back. As with EIDL, the PPP you apply for the loan first. With EIDL, the grant is forgiven automatically. With PPP, you must seek forgiveness after you have spent the money. Therefore, given that the burden of proof is on us, the business owners, record keeping here is essential. 75% has to go to salaries, with only 25% or less approved for things such as utilities and rent payments. Now let's be honest, some employees just aren't going to want to come back for a variety of reasons. You will not lose PPP loan forgiveness if you make what the Treasury Department has called a good faith written offer to rehire a laid off employee at their same hours and wages and they refuse to take it. You will, however, need to have a documented evidence of being turned down by the employee. In this instance, you can exclude that employee from the loan forgiveness reduction calculation required under the Act and include this written evidence as an addendum. The CARES Act requires that you apply to your lender for loan forgiveness at the end of the 8-week period following disbursement of your loan. Now, that means for some of you, the clock is already ticking. To apply, you must submit the total amount requested to be forgiven, verification of the number of full-time employee equivalents on payroll and their pay rates, including payroll tax filings, verification of your payments on covered mortgage interest, rent, lease, obligations, all that good stuff, and utilities. Your lender must then make a decision on your application for forgiveness within 60 days. For either of these loans, if you use it for not permitted purposes and you're going to get caught, then it is subject to immediate payback at a rate of 1.5 times the original amount, and, as was the case recently in New England, could expose you to criminal charges, which is not what your business needs right now. The last part to keep in mind is taxes. As is the overall case, the EIDL advance is the easiest to comprehend. Think of it as a non-taxable grant. The PPP, on the other hand, is much more involved. While you don't have to report it as taxable income, you also cannot deduct the expense of using it. Therefore, on your year-end taxes, you won't be getting the benefit of 10 weeks of payroll expense as you had in 2019. So you're going to want to start planning for that now. I should mention here that the US Senate introduced a bill this past week to try and change this, which means at their average pace, you should probably see that benefit sometime around 2050. The main takeaway here on these funding guidelines is that currently there aren't many guidelines. So keep track of literally everything for the next several months in case you need it. Also, consider setting up a new account within your company just for these funds. This way, they won't get convoluted with your other income and expenses, and it's going to make life just a lot easier for you come reporting time. Now, as always, we're going to make every effort to keep you apprised of these ever-changing landscapes. If you have any specific questions about any of this, or if you'd like further guidance, you're always welcome to reach out to me directly. In the meantime, all we ask is that you keep healthy and you keep shopping local.